Morning all, how are we doing? Morning Dion, morning Ladder, morning Stevie. How is everybody? Hopefully you don't live in the UK, we're all doomed. Doomed. Bailey upset the market yesterday, ever so slightly. I was watching this live. I was actually watching, there's a really good Netflix show on at the moment by the people that make The Haunting of Hill House. I was watching that last night and just had Financial Juice up, and suddenly my wife said, "What are you doing?" Because I was watching Bailey's statement flying up here, and going red, and then I was sitting there with my MT4 up, watching the pound gradually collapse. So yeah. Not good. Not good if you've got a pension. Anyway, we'll look at that in a minute. Living the dream. Gian, what is living the dream? Morning, David. Oz slowly going down the same path. The entire world is going down the same path. I flicked over last night at 9 o'clock. If any of you have got Virgin or any of you have got Bloomberg TV, it's really worth watching Bloomberg TV for the market wrap. Every night, 9 o'clock. They go through basically what's happened in the financial markets, and they give really good, clear understandings of economics and what impact things are having on economics. And they had a guy on there last night. He runs a large investment firm and he's a multimillionaire investor himself. And he was talking, and he was not pulling his punches on the Fed and how the Fed have screwed this up royally, and it's not, we haven't seen this actually kick in yet, the problems that the world is in at the moment financially. And he was saying how he's pulled all of his investments and he's putting absolutely everything he owns into shorting the indices, shorting everything, short lot. This guy's made loads of money in the markets. He knows what's going on, and all he kept saying was 2-3 years short. Just keep shorting everything for 2 to 3 years. Interest rates 15%, no problem. Recession, they keep saying we might go into recession. In fact, yesterday, in here somewhere, Biden came out again and said we might go into a recession. It might be a little small one. I think the European bank said the same. The Europeans were saying the same thing, and it's like, this guy's like, these guys have got no idea what's coming. And it just goes to show yesterday with Bailey's intervention, pulling his intervention, it's like, no, it's all screwed. We're stuck. Basically, get rid of your mortgage, get rid of any loans you got, go and live on an island and eat crab. That's what you can do. But anyway, yeah. So yesterday, let's go through the news. There's a fair bit of it. Bailey yesterday gave the government a shot across the bow. So on Friday, the Bank of England are pulling intervention that they did. So looking at the chart, this was the government screwing everything. This was Bailey temporarily bailing everybody out and making sure the pension funds didn't go bust. And this yesterday was Bailey saying, we can't do this, sorry, over to you, government. So what do you think happens to the pound next? Yeah. Morning, Themba. Morning, Kabibi. So basically all of this yesterday, watching this all collapse, I was watching the hourly chart yesterday. And I was shorting, actually, the DAX. At exactly the same time. The DAX is about to open in a minute, literally in 4 minutes. So I was short in the DAX. I took a short in the DAX yesterday, right at the end. Look, this one here. Look, I took it at 9.44. That trade there. Beautiful. So yeah, I shorted the DAX when I saw this all unfolding. So basically, this is Bailey's intervention announcement yesterday. So What he's basically saying is, obviously, they did a load of bond purchase to bail out the government. The problem with this is, obviously, it's going to cost the government too much money moving forward, so they can't do this. Basically, it was an emergency intervention to get the government out of the issue that they had with the mini budget. The Bank of England then asked them to say, and so did the markets, asked them to say, what are you going to do about this? How are you going to pay for all of this? And then Kwasi turned around and said, don't know, tell you at the end of November. And obviously the markets just went, what? And that's where it all started going hideously wrong. So then they said they're going to bring it back to end of October, 31st on Halloween. They're going to announce what they're going to do. But that still leaves us now with another 2 to 3 weeks of we haven't got a clue what's going on. So Bailey's basically turned around now and said, policy is working in opposite directions, i.e. government is pulling one way, the Bank of England is being forced to pull the other way to bail them out. This market intervention will be temporary, and this is the big one. My message to pension funds is that you have 3 days to get this done. So basically the pension funds, most of the pension funds in the UK have an awful lot of money in bond purchase, gilt purchase, all this sort of stuff to as an investment moving forward. So they are seen as usually safe investments, 3, 5, 10-year investments. When you're running a pension fund that somebody's going to start and cash out in 30 years' time, a 10-year return on investment is brilliant. That's what they want, safety. Bailey had to upset the apple cart because everything was crashing. So they bought a load of it. And now they've said, actually, we can't do that. They're going to have to reverse their decision. So all the pension funds have gone, phew, when Bailey intervened. And now that he said, you've got 3 days to sort it out. So you've got to pull out all investments from bonds and gilt, basically, and put it somewhere else. Where do you put it? The markets are crashing. The economy's crashing. All financial markets, as well as FX markets, are crashing. Where do you put investment right now? So he's basically said you've got 3 days to sort your life out, change your entire portfolio and forward-thinking investments for the next decade in 3 days. Not good. Basically, as he says here, we'll be out by the end of the week, i.e. you're on your own. You've screwed it. So that's what's obviously happened to the pound overnight. What the market's going to make of that, DAX has just opened. What the market's going to make of that will remain to be seen today. But obviously you can see what the initial market reaction was, considering the banks were closed when he did this announcement and the investors weren't able to do their executions. That's what people that were able to execute did. I get the feeling this morning there's a lot of orders going to be in for selling the pound. I don't know, but obviously that is what I would suspect. We're going to get a continuation drop. So I've added 2 positions on. I've obviously got these shorts on at the moment on the pound. I've added 2 additionals. If we're going to get one of these days, where, the market goes, nah, not interested. I want to be on it. I've got this little orphan position down here, which is why my average is up there at the moment. So we'll see what happens with that one. Obviously this morning, markets just opened, so we'll see what happens. There's a lot of other talk that's come out as well. GDP figures this morning just been released on the pound. We were forecast to be negative GDP growth. Flat GDP growth. We came out as negative. Again, not good pound. So do not be buying in the pound at the minute. IMF came out as well last night and said the fight against inflation with the central banks will last until 2024. Read into that, we will be raising interest rates for at least another 18 months. So all these 0.5s and 0.75s we are seeing at the moment, they will carry on for at least a year. Probably more likely around about the 0.25s and maybe 0.15s, which is what we've just seen from the Australians. So that is all going to continue for the next year. This is all a driver for recession. Every time they do this, recession looms. People's jobs will be lost as the economy slows, as interest rates rise. This is all turning into the Great Depression. And this is what this guy was talking about on Bloomberg, end of market wrap last night. This is not good. You want to be hitting the sell button constantly at the minute on everything. It's just not, investors, if you're think of it this way, if you're a multi-millionaire or multi-billionaire, your job is to manage the interest on your money. You will earn more money in interest and investments than you will ever be able to spend. So you're just growing your pot at a rate. Investors, it's more beneficial for them at the moment to pull all their money out, stick it into something like gold or into liquid cash in whatever currency. Probably the US dollar is going to survive the most out of all of this, than it is to try and gamble in any kind of investment. They will be pulling their stocks at rates of knots over the next 6 to 12 months. It's just going to crash. So, as well as the housing market is just started to slow down. That's all going to fall over. So yeah, it's all going wrong. Unemployment rate in the United States will rise by 2%. This is how the spiral starts. There's loads of news. We've got to cover this because it's important stuff. As people become unemployed, they then turn to the government for a bailout. Yeah. As people become unemployed, they don't pay tax, which means the government has less money. They have less money coming in from tax, and they have to give out more money because they got to pay people in benefits and bail people out. Yeah. As people lose their jobs and the employment market drops, the economy comes down with it, which means that businesses make less money. Businesses pay less tax. The government has to bail them out. And it becomes this never-ending spiral of everything going that way, forcing everything to go that way twice as fast. And this is where you get this recession starting. House prices, interest rates go up because of all of this, which means mortgage rates go up, which means when people come to remortgage, they were paying 2% on their mortgage. They've now been asked to pay 8 to 10% on their mortgage. They can't do it. So they default. The housing market collapses. House prices come down, making people poorer. It's just this never-ending spiral, and this is why they call it a recession. Everything slows down till it turns and goes like that. Nobody's buying stocks in that time because businesses are making losses. And as businesses making losses, their share prices come down, which makes people run for the hills faster, which makes them draw it. I keep drawing these arrows, but this is what basically happens when you get to these situations. We've never had a period in our lifetimes when we've had such an economic issue with debt. Every country is in more debt than it was at the end of the Second World War. Yeah, we've never experienced this before. The end of the Second World War in the UK specifically caused the biggest interest rate hikes we've seen. And that is exactly what we are right at the cusp of now. So, then this is kind of why I'm setting the up this morning, which I'll talk about in a minute. Start shorting everything, basically. ECB's Vilroy, a brief recession is less damaging than stagflation, basically. So, a brief recession is what they're aiming for. They are openly saying, the ECB here, we want to force a recession, because if we don't force a recession that lasts for a year or two, where everybody's a little bit poorer for a year or two, you're going to be poorer for a decade. That's what we want to do. And obviously the ECB is behind the curve at the moment as well. So, this is all assuming, obviously, World War III doesn't kick off in the next couple of weeks. Sorry to be deflating, but that's the real world at the minute. On the plus side, Japan came out with their figures being as expected on year-on-year orders, but look at monthly, massively down. So this is, again, year-on-year as expected. Month-on-month, we are starting this. So that year-on-year will also start to drop. So it's all teetering over the edge, just like a plane stalling. This is all about OPEC and stuff. Don't need to really worry about that. This is the one that really got me, that I looked at this morning. A recession in the US is possible, but any downturn would be very slight, and the US economy is resilient enough to weather the storm. By doing what, Biden? Printing more money. Why are you in such a mess at the moment? Because you've been printing money. Yeah. They've openly said the way out of this is to print more money. This is just utter rubbish. By the time this all kicks off, he won't be there anymore, so it doesn't matter. Bank of Korea just saying they're going to maintain their hike policy. Again, another one, I keep going on about this and I keep saying the same thing. I feel like a stuck record at the moment, but this is exactly what the Japanese are doing. We are closely monitoring FX moves with a keen sense of urgency. We will take appropriate action in case of excessive FX moves. How many times have we heard this? How many times have I said this in the live room over the last month? This is all they keep doing. Talk, talk, talk. No intervention. Why? Because they can't. Because they've been buying their currency, which is deflating, and it's all going wrong. You know, every company, every country, is in exactly the same situation at the moment. None of them have really got an easy way to get out of this, but make everybody poor and crash the economies. There's just doesn't seem to be any way out. So, oh my God, what's this? Another leak. Oh, good, a leak in an oil pipeline. Oil's going up. Didn't get down to my target, that. DAX opening range is in. Gap fill. Looks like it's happening this morning. I'm not trading the DAX this morning. Reason being, it's FOMC day today, which we'll cover in a second. I expect a bit of chop today. Although saying that, with what happened with the pound yesterday, obviously that might be a different kettle of fish. We might just get a collapse this morning. I don't know, but I'm loath to really try and trade this morning. What I might do is wait until the 15-minute opening range is in, and then see if I can get a break of that, which worked really well yesterday, which again I'll cover in a minute. But yeah, so there you go. So that's where we are at the moment. GDP down for the US. Year-on-year estimate down. It's all down. Everything's down. Manufacturing production down. So depressing. Change in flows of Czech Republic. Careful about economic forecast. Most turn out to be inaccurate. Yeah, whatever. Right, so there's news covered. So basically that's what we had overnight. Coming up today, we've got PPI this afternoon, which is likely to be a big mover for the US dollar. We've got Lagarde speaking later on, and it's the G20 meetings today as well. Wouldn't worry too much necessarily about the G20 stuff, although obviously Russia will be on the cards there as well. So we may find more sanctions come out today, potentially. But this evening is the big one, FOMC. So obviously what comes out of the FOMC meeting minutes will be a gauge as to monetary policy moving forward. The market has factored in a 0.75 increase on the next US rate. And the market seems to like it at the minute. As we've seen, the US dollar pairs are doing well. Everything's up. So if they come out with pretty much what they've been saying over the last couple of weeks, and don't come out and say, actually, we're going to do 0.2 next time or 1.5 next time, anything ridiculously out of kilter, we should potentially see more strength in the US dollar. So we will see, regardless of what Biden says. They are still stuffed, don't get me wrong. Everybody's stuffed. It's just, when I keep saying about this, when you're looking at a pair to trade, like, for example, euro, US dollar, you've got one that is always going to be stronger than the other, and that gives you your directional bias. The euro isn't doing very well. The US dollar is doing very well, so you need to be shorting the euro, US dollar. Yeah. Whenever you have this situation, which we're in at the moment, where everybody is struggling, no matter what they say, every country is in economic turmoil at the moment, trying to pay for COVID with everything going wrong, interest rates, etc., there is always still going to be someone that's doing better at being bad. Yeah. If every country is coming down, you're going to have one that's not coming down quite as much as the rest. That is your strong currency at the moment. That at the moment is the US dollar. So, even if they come out and say something, it's not going very well, you have to look at it, for example, against the pound at the moment. If they come out with something negative, it doesn't mean that the pound is going to fly up through the roof against the US dollar, because the US dollar is doing better than the pound is. Therefore, you're probably just going to get a bit of sideways. So it'd be interesting to see what happens with the FOMC this evening as to whether they come out bullish or bearish and what the general consensus is. But markets have factored in 0.75. So if they're coming out and saying anything different, we might get some big moves off of the FOMC this evening as well. But again, we may get nothing. So today, what we tend to get on FOMC days is typically movement, but sideways, because businesses aren't interested, firms and funds aren't interested in really putting in a massive investment on the day that there could be a massive upset from the Fed. So we tend to see movement, but it tends to be fairly sideways or continuations of whatever's happening at the moment, but no, massive spikes. We don't tend to get many ADRs on FOMC day. Saying that, we don't usually have Bailey coming out and destroying the pound the day before FOMC. So you just got to trade what you see, basically. At the moment, the pound's recovering so far at the open. I say it's recovering, it's not doing anything. It's up on the first 15 minutes, which doesn't mean anything. This is down on the first 15 minutes, doesn't mean it's going to go down, does it? But yeah, no big movement. They may well pull this back up before obviously putting it back down again, ready for the FOMC statement later. So we'll see what happens. But that's your news. And then tomorrow we've got the obviously CPI, which is the inflation consumer price index for the US. So again, another big one. And then we've got retail on Friday. So starting from this afternoon at 1:30 is when our volatility should start to kick in. So big old day today. Morning, Shout. Morning, Jeff. So I'm just catching up on your comments. Just want to know what you classify as first 30 minutes of the DAX. DAX opens at 8 a.m. UK time. You can see when it opens. Look, yeah. This is the open. Look, 8 o'clock. That's when this is when the exchange opens. This is when the market opens, the floor, if you like, the banks. Yeah, that's what we call the opening cash balance. That's the initial flurry of transactions that goes in, if you like, at the opening bell in Frankfurt. Same as 2:30 UK time is the opening bell in New York. This is Frankfurt's version. But the exchange starts trading with volume at 7 a.m. pre-market, and then it starts properly at 8 a.m. When all else fails, they take you to war. I know, and that's the other worrying thing, isn't it, Stevie? It's their get out of jail free card. Well, not get out of jail free, because war costs a lot of money. Did you hear about how much they spent, Russians, bombarding with all those cruise missiles? I didn't realise they're like 6 million a pop. He sent 80 of them up. Do the maths on that. Yeah, that's a lot of money just flew through the air, and they shot 20 or 30% of them out of the air, didn't they? War is not cheap. War is usually good for the economy, because it creates an awful lot of jobs, and business does very, very well in war. Everybody else does badly. But yeah, obviously that's going on at the moment as well, and obviously tensions are getting high. So be very, very careful out there at the minute. It's not a fun place to be, is it? Anywho, nearly 500 million in missiles. Yeah, it's ridiculous, isn't it? You think about it, 500 million in missiles. And those missiles, I know they took out strategic point site, but I mean, the actual destruction those missiles do, if you look at it on a grand scheme of things, isn't actually that massive, is it? I would expect, if you're spending 6 million on something, I'd want it to make a bigger bang than it does. I know they're not, they're quite big, but in the grand scheme of things, it takes out a building. Not a lot of firepower for 6 million, is it? Just to take one building out. But anyway, I don't know much about wars. I don't do it. Anyway, ADRs, nothing today. As you'd expect. Well, actually, that's tell a lie. I was expecting actually to see a little bit more action in Asia, but we didn't get it. So on the pound, so flat line at the moment. The only thing we've got here on the weekly at the moment is Aussie New Zealand, which I'm in. That's also hit its monthly range. It's just exceeded its monthly range. So Aussie New Zealand, I've got a long on. Look at it on the hourly. So there's your weekly range here, 167 on a 135 weekly range. So nice rejection this morning on the hourly on this push down, but I'm in first position on that. And look at it on a bigger time frame. Obviously, that was a big old day yesterday. New Zealand dollar had a lovely rally yesterday, and obviously the Aussie's still weak from its stupid rate announcement. Again, this is the thing that gets me about these central governments and banks. It's like, you know you're in a mess. Don't muck about with interest rates. Don't say you're going to do something and then pull the rug out from the markets. Feet. It isn't going to help, is it? Yeah, you want your currency to be strong when you're having financial problems. The last thing you want to do is muck about with interest rates. They do. I don't know why. Yeah, so we're back down now, 72. So assuming the Aussies are going to be, beating New Zealand dollar, this is where I'm interested in getting in long, which is where I am in long. This is where I've been saying I wanted to get in long. I missed this little rally here, but this is where I said I wanted to get in long. So I'm in. Extended on the 4 hour. First extension we've had on the 4 hour for a while on this one, but it's a lovely trender. And obviously, trends come to an end. This could be where we are going to start to break down. But what tends to happen when we get our first breakdown is it's fast, hard, and has a decent pullback, which gives us our exit. So if it is going to break down here and we are going to see continued Aussie dollar weakness, that's fine. I will scale in as we come down and get out as we push back up. Aussie dollar CAD I've got long on as well. Hasn't gone anywhere since I got in. I got in somewhere around here. We've just not really gone anywhere yet. So sitting there very nicely extended, still waiting for a profit take move back up into resistance. Looked like it was starting yesterday and then they reversed it. So we might get another leg down. If we are, you do run the danger of having that's the kind of the third leg and we've gone into an expanding range. So what I'm hoping is that we carry on in our expanding range, which will bring us back up into there somewhere. I'll look at it when we get there, if we get there, and I might get out early on it. Obviously, this is a dangerous trade. It's a counter trend. So we will see on that one. Pound US dollar is the only other thing that I've got on at the moment, obviously. Expecting either a breakdown today or a pullback and drop. But we'll see. There's what Bailey just done yesterday. The market needs to digest. This is a knee-jerk reaction. Yeah, and the market's not always right. What he's done yesterday when the economists sit down may actually be good for the pound. It may force the government to U-turn their mini budget, scrap it. So, government's mini budget. Look at the normal price action. Government's mini budget. Huge collapse. Nearly bankrupted the pension funds. Bank of England steps in, sorts it out for them. This may be good for the pound. This could be Bailey going, slap on the wrist, government. Now you realise what you've done. Maybe you should think again. Okay, we'll undo that and we'll come up with another plan that is actually going to work and do something positive for the UK, because that obviously was not. So it might be a positive thing, in which case, obviously, we might see some kind of pound rally. But until the government comes out with a statement as to what Bailey did yesterday, or Bailey comes out with something else, it's business as usual. The pound is coming down. And at the moment, the government stance is they're not going to tell us what's happening till the 31st of October with their fiscal policy. If they ain't telling us anything, we're assuming we're in the same boat as we were here. Yeah, so you've got to be short pound at the moment unless there's any intervention news. So there's nothing on there to look at. We've got some ADRs. The ADRs are pretty much the same as yesterday. Aussie CAD, which is still just about extended on the 4 hour, which is I'm in. Aussie Swiss is extended still. This has been very orderly on the way down. I don't like this as much. We've had a lot of green candles in here. It's been profit taking all the way down. It's not it's not one of these that needs a big profit take, big move, big profit take. It's been just trading down nicely. Likely is at some point we will get some kind of pullback or accumulation on it, but it's not, although it's extended, it's not stretched, is it? It's just been trading down nicely. So not quite as nice, that one. Aussie New Zealand came down very hard, still coming down hard. We've tapped into the 72, so I'm looking for a bounce on that. And ideally, as I say, looking for a trend continuation. Just because we're down at the 72 doesn't mean that's where we're staying. It means we're putting back at the moment because we've had bad news. But there's no reason why the Aussie shouldn't still be stronger than the New Zealand dollar, really. And Aussie US, again, very extended. Wouldn't want to long anything against the US at the minute. Want to be shorting everything against the US. Euro odd is extended again to the upside. Again, this is Australia. Nice 3-bar reversal going in right now on this one. So if you drop down to, if you're interested in getting into this one short, which I kind of am, but I'm into Aussies at the moment, so I can't take any more Aussie. I've got my full exposure Australian dollar long. Nice 3-bar reversal. So hourly, you're just about to get the reversal at M15. You had it this morning. So this is part of a 3-bar reversal on the 4 hour, which is push up, shooting star, pull back. 3-bar reversal can be either of those. Very good reversal signal. You had one there the opposite direction, look. Push down, push up. Yeah, so those 3 candles. But obviously, that's a continuation pattern. This is a reversal pattern. But what you should read into that is at the moment, we're in an accumulation. So Euro weak, Aussie weak. Euro stronger than the Aussie at the moment just because obviously the Australian dollar is so weak off the back of their rate announcement. So you've got that one, and then you've got US dollar yen. And again, after what was said yesterday, the same old coming out of Japan. We will take appropriate action. Yeah, it's just nonsense at the minute, utter nonsense. That was their appropriate action. Yeah. Yes, that will happen. Next time the Bank of Japan intervene, that will happen. Unless they come out and say, the same as the pound at the moment, unless they come out and give us some solid plans as to what the hell they're doing, all it is a knee-jerk reaction. We continue as normal. So, again, not looking for shorts. US dollar yen. Long. Just long it. Until the Bank of Japan say something otherwise. If Euro odd does start to come down, where do you see the target? Euro odd. It's a difficult one. This. The volatility was here. So that was our block of fight between the buyers and sellers, basically. Look at normal price action, yeah, which is where we got to stopped. We came up, stopped. We finally slammed through it. We haven't retested this area yet, which will be 72.24 somewhere. So that's where I would see as the ultimate target. The problem is you've got all this mess in the middle. So quite where the market would pick as a turning point is difficult on the way down. There's not really any propulsion gaps in this move here to aim for. You've got this here, which is this one, which has been tested twice. So we know there's buyers in there. So this is a good area to target because we know there's buyers here protecting this level. But if this is a turning point and we're going to see a weak euro, this is probably the buyers getting out of their positions, which is why you've got all this volatility ready for a reversal. Long term, this is obviously. So it's difficult to pick a target to the downside. That's too small. It's been retested. So it's this level here really, which is miles away. That's where I would see that going. But I think there's better euro pairs out there to trade against the odd. You know, again, when you're picking pairs which are strong and weak, you're picking a week against a week. So you're going to get a lot of this. You know, this is a 4-hour chart. This is, you know, this accumulation period here is running from 15th of September to the 29th of September. Yeah, so you got 2 weeks, 2 to 3 weeks basically. Whereas if you entered a trade on this, you sat sideways for 2 to 3 weeks doing absolutely nothing. Agreed, difficult, which is why I asked. Yeah, it's a hard one to pick. Pick a level on, because you've had expansion in volume and volatility in it. You know, for normal price action, this is where, you know, this is what I was saying. ADRs really picked up. You know, this is the ADR dash. We were looking at pound New Zealand, yeah, at 145. We're looking at 340 now. The volatility on a lot of instruments because of this has picked up. There's a lot of volatility at the minute. And it's usually like liquidity. You know, the less liquidity you have in the market, the less participants there are, the further price has to move to find buyers and sellers. You get larger expanded price action. You know, and the S&P it's clear in the S&P. You can see it very clearly on the S&P daily charts. Yeah, you know, you can see what normal price action is. This is a good explanation of volatility, how to measure volatility. Look at all these candles. Look how big these candles are. Yeah, all these little candles here. I say little. This is normal S&P price action. Yeah, and then look what happens when we start to go into a bear market. Yeah, there's the size of those candles I just drew. Look at the size of the candles now. Yeah, this is high volatility. This is the fear. This is the greed. We're in a state of extreme fear across everything at the minute. So you get these big moves. When you see that going in, that high volatility, which you can clearly see on the daily chart there, it's usually a precursor to something happening, and quite often a change in direction. Yeah, look here, little candles, big move, change in direction, big move. So potentially this is where we're going to see this happening, but they're the guys that have got to sort it out. And I think what will cause the next move and change of direction will be Lagarde and their change in policy in the Australian, on the European, on the euro. So I like it short, the euro. I just don't like the euro odd at the minute. There's nothing else on the 4 hours. Hourly, we've got nothing. And the hourly 14 RSI, we've got 2, which is the Aussie New Zealand. Again, extended to the downside on the 14. Just about. And the Swiss yen extended to the upside. Now, Swiss yen, this is not I've missed it anyway. Missed it. The entry was while I was talking up there, so you missed it. But yeah, there was an entry on the Swiss yen just about. Swiss yen is obviously, again, Bank of Japan intervention, not a bloody clue. You know, like this is just total overkill. This is people, you know, not interested in the yen at the moment. I'm not putting it back in. So where we're going from here is difficult to tell. I really want to be, as I say, I want to be short everything against the yen, because when they do, it's not so much a case of I think the yen is going to power up long term. It might do, and it would be lovely to see. But the reason I want to hit the short button is because every time they open their mouth and actually do something rather than just talk about it, that is what we get. So when we get the next one of those, I want to be the right direction on it. Yeah, so that's all we've got on those at the moment. There's nothing else really to look at there. That's collapsing this morning, just coming down into support. So if you're short, you might want to get out. Wait for some bullish price action, I would, if you took that this morning. Themba, thank you, London session. My DAX short went well. Cool. Good man. So that was the opening range break. I mean, for me, that is a difficult one to get on. But look at where you are. Yeah. Yeah, don't forget it's FOMC, right? Look at what the market did yesterday ahead of FOMC. Look at what it's done now ahead of FOMC. So be careful here. Look at it on daily. We are obviously short, but you look at this. Is this bullish or bearish? No idea. The market's got no direction whatsoever at the minute. It's not bullish, it's not bearish. So you, on the short time frames, you play price action candle by candle. This is now looking, we've got 2 minutes left. Bullish. Yeah, everyone's buying up the lows. We know that because they've been doing it for the last 4-hour candles. Everyone's been selling the highs. Yeah. Any reason why they should stop ahead of the largest announcement we get from America coming out at 7 o'clock tonight? No. See what the US is up to. US is looking a bit bearish at the minute. Very bearish. They're in a better state than the DAX at the minute. So, so yeah, I'm looking at the indices, obviously, while I'm on them. Shorts, all shorts. Obviously, we're in a bear market. We're not getting out of this until the world gets better. So this obviously target hit on Dow at the moment. We're still on the way on the S&P, and we're still on the way on the Nasdaq. And the DAX is obviously just falling out of bed anyway. So yeah, still bearish on everything, but obviously not today. GU tumbling a bit, is it? Yeah. So I've just got into another position on that one short. Gathered up into another one there. And I've got another one on the break of the Asian low. This might come and kick me in the arse, but I don't think we're going to get any. There's one or two things is going to happen today. We're either going to get the market doing the continuation, or we're going to wait for PMI and go sideways. So there's not really any harm in getting into one extra position at the minute, maybe two. If we're just going to go sideways, the real movement on this pair today is going to start at 1:30 when we get the PMI, the PPI figures coming out, and then obviously this evening when we have FOMC. PPI will be a whipsaw in all likelihood, and all we'll do is we'll come and take liquidity from stops at the above and below, and then FOMC is when they'll move it. So, the pound is weak at the moment. I get the feeling we're probably going to get more positivity coming out of the Fed, which will obviously drive this down. So, and even if we get, and this is why I'm not really too worried about this, even if we get negative sentiment coming out of the Fed and we get a move up because the US dollar weakens, the market's going to undo this because they're not happy with the pound. So we're just going to get an A-shaped recovery, which should probably bring me back to where we were. So I think it's a pretty safe trade at the moment, pound US. DAX, hammer. That's worth a cheeky little long, isn't it? I'm just going to take a 0.25 on it. And I'll go with a buy stop at the high, this candle, just so that I've got some confirmation of going long. Obviously, this is an accumulation with a propulsion gap. So we might find sellers step in here. This could go out. This could come out the lows today. The way the things are at the minute, this thing could tank very easily today. And if it does, oops. We're targeting back down to the lows of the week before last. Yeah. and last week actually. It's for it's Thursday, wasn't it? Yeah, Thursday. Sorry, the week before last. Yeah. So that's where we will be heading next stop, isn't it? To retest these lows, if it's going to go. So, but I'm just not really interested in range bound trading at the minute on this. I'll take a little long on this one if it goes, 0.5%. So just to quickly cover, I had a few people, I've got a few bits to cover this morning, so I want to set up the EA for the trend-based, all the research I did yesterday. I'm going to be setting up the EA to trade H1M5 with the trend. But a few people emailed me yesterday because I posted, obviously, what I did yesterday. I did 1.5% yesterday. A couple of people that were in the live room yesterday messaged me saying, how can you be 1.5%, 1.8% up when you were 1.9% down in the live room? I did actually post some of the trades in the group, in the Telegram group, but I just wanted to cover what I did yesterday. And I'll do it on this chart, actually, because I don't want to upset the other one. So the DAX yesterday, as I said, I took that short. Sort of yesterday, isn't it? So I took that short. On that reversal of that, basically, I took and got out at the lows. That was my last trade yesterday, and that was while I was watching Bailey. So I was watching the pound. As soon as the pound started to drop, I shorted the DAX, basically, when I got a signal, a short, a bearish candle. That's why I took that trade. Literally, it's kind of a news trade. Stop just up there. So quick final trade of the day. The morning, as we know, yesterday, went bad. Where are we? God, I did a lot of trades yesterday. So yesterday morning, I got chopped to pieces, as we know, this was my 1.9% down yesterday. So I was longing the gap fill yesterday, remember? Going for the gap fill. There. Got out there. I flipped short here. And then as soon as I flipped short, the market popped. Yeah. And I drew a line there and said, nah, got it wrong this morning. And we still haven't got this gap fill. And so watch this. There's every opportunity they might do that. Our dating site is back again. Our friends. So yeah, took that one. And then after that, I got back in the DAX. Okay, so I took a sell there. Okay, so just after I came off of stream, or was that during stream? I can't remember. So I took a little sell there as we got that bearish move. And the idea behind this was, okay, I'm wrong. We're not going long today. We're going short. So my idea on this trade was, this is a pullback drop move, which is what happened. Yeah. So that was the reason for that one. I then had a little buy, which I scrapped because that was a mistake. Oh, these are ones I did on the stream, weren't they? And then we had that other short that I entered. So this was me entering those shorts, wasn't it? So there's one in there, down to there. So after that, basically, I just built a position short, which is all these ones. So stick all these on the chart. This is the post. This is what I posted in Telegram. Remember, I said I will post an update on this one in the Telegram group. So these were all sells, basically. And there's a couple of buys in there at the end, which went wrong. So that was the main trade that I took yesterday. So, and this is a really good sort of lesson, if you like, in doing what the market tells you. It doesn't matter what your bias is. When you start trading in the morning, when you're scalping, you need a bias. My bias was long because we've got that gap fill. It's a really easy gap fill. And my bias was also long because we've had 2 down days beforehand. So I was like, well, we're probably going to have a little bit of a pullback. The fact that we gapped down gave me my long bias. I was wrong. Yeah. And then I tried to short it down there, thinking we were going to have a collapse day, and we didn't. So I was thinking, right, we're not long, we're short. I took a little trade which worked. And as you can see, that was the first trade that I took there, assuming that that was going to be that sort of movement. So we're just going to get market structure going to the downside. Yeah. So I took the initial position, added, got out of the add, yeah, added another one on there. We pulled back a little bit, added another position. As we came down, I added another one in there, and I took the whole lot off down there. So this entire move here undid all of those losses. Yeah. But this was me changing my bias from long to short because of that. And if that trade had failed, I would have switched back long again. Because one of two things, there's only two things that are going to happen in the market. It's going to go up or it's going to go down. Obviously, it can go sideways as well. But the market, these sorts of markets will either go one way or the other. Yeah. So you have to decide whether or not when we open, we're going to do that or we're going to do that. Yeah. Market structure. Are we going to be bearish market structure? High, low, lower, high, lower, low, or we're going to be bullish, high, higher, low, higher, high. And you have to make a decision after that initial move. Is this that or that? And that is where I make my decision. And my decision was, right, don't think we're going to do the gap after the strength of that move. I'm going short. And it worked. And this is what trading is all about, is not necessarily looking at what it's been, is your crystal ball. Right now, visualize where you see this being in an hour or 2 hours time. My visualization was, if we're going short, we're going to make a new low. When we made that new low here, I was worried because we bounced off of it and then we collapsed. As soon as we made that new low, one of two things is going to happen, isn't it? It's either going to be a liquidity run and it's going to run for the hills, or it's going to collapse. That is where I look at my P&L and go, right, I've got all those losses back. Let's just get out of this one and call it a loss for the morning. Yeah, and that's what I did. And then it obviously pulled back up. Why? Because everybody that took along there had their liquidity under there. Everybody that took the double bottom there had their liquidity under there. Once they'd taken that liquidity, they had everything they needed to make a run for the hills and make a load of money. Yeah, so at that point, and this is the important bit, that is where I changed my bias. I was like, right, that bearish move there looks bearish to me. Let's have one more crack at it, short, because that's what I thought was going to happen there, and it failed, and it worked. Yeah. So that's my trades yesterday. So I just wanted to cover those because a few people asked me, because I posted this in Telegram, posted this image in Telegram. I took these live on stream, but I obviously wasn't on when it all finished. So that's what happened yesterday. Just for those that wanted to know. And then I took a couple of trades which failed here, these buys there. And that one there, after we pulled back. And again, you can see, can you see what I'm thinking here? After what I've just said, can you see what my thought process is at that point? Yeah. I'm longing it after having been short. Why am I long here? What is my brain thinking is going to happen next? Low, high. If we're going long, what's going to happen here? If we're going to put in bullish market structure, what is going to happen? We're going to put in a higher low. So I'm thinking here, looking for signs of bullishness, and we got one little candle, which I was wrong on, which is why I bailed on the trade. That is where I'm thinking into the future, if we're going to put in bullish market structure, this is roughly where we should be looking for signs of bullishness, because this is where the market's going to go from. If I'm wrong, I need to get out. We put in a double bottom, and I missed that trade, didn't take it. Yeah, so I had a couple of failures in there. And then I took another one, which I'm sure I took another short, which failed, didn't I? Oh, prices loads. Oh, yeah. Sorry, that was the US 30. So I'm sure there was a DAX or a Dow. Yeah, then I flipped over to the Dow, and I was trading the Dow. I won't cover all of these because... so I was long in the Dow. This is the US Open, obviously. So I longed the Dow there, took a quick scalp. and I took a few more trades on the Dow yesterday. That was the one I posted in the Telegram group. There, this failed short. So I'll just quickly cover them. It's good, just good to see what I was doing basically, because it just answers the questions. There's a long. So this was a scalp at the open. This was the open, big push up. So I took a break, that candle, quick scalp out. Then got into 2 more longs as we pulled back. So what I'm looking for here is bullish market structure. Yeah, so pull back long. So we pulled back, took a trade, pushed up, took a break at the high of that candle, and got out of those up there. I took another one there, and then we immediately went bullish, broke that high, and then went bearish. So I just scrapped it there. And that is the trade I posted in Telegram that failed, which is this one here. That's short. So I posted it in Telegram. We took out yesterday's high and immediately pulled back and went bearish. So I said, if we are going to go range bound ahead of FOMC, this is where we're likely to have found our top, and we should be trading back down to the lows. You can see my TP was there on that one. But it pushed back up and took out one more level before obviously it came down, and then I traded that short on the DAX. So I took a 0.25% loss there, and I took about a 0.6% win there. Yeah, so that was all my trades yesterday that I took scalping. So just wanted to cover it because I can't show it all live. It doesn't work like that with scalping. It's discretionary, as I keep saying. It's, you know, if I see something and I think, yeah, that looks good, I'll get in. It's not a case of there's no mechanical system sitting here that is, if this happens, do that. It's not how I do it. But anyway, so that's all covered. That's what I did yesterday. For those that asked. Pound US dollar coming down nicely. DAX going nowhere. So that buy on the DAX is just flatlined at the minute. Pound US dollar. So if we can get this ugly reversal alert on today, and we break the Asian levels. If we break the Asian lows today, I think it's going to open the floodgates. Everybody's sitting, as I am probably here, with liquidity ready to go short on this. So if we get that Asian low done today, I think we might get a move ahead of the PPI figures, but we'll see. Right, so I'll leave that DAX on. It's only 0.25% risk. EA. So what I did, I see someone's just asked in the Telegram group, could you post the set file you're using for this? Would it mean reversion with an EMA filter? Okay. So all the research I did, I was looking for a way to get in to H1 entries on all these trending pairs. So these trending pairs, I'm missing too much. The reason I'm looking at this and doing this research, the reason I did all this research, was because I'm missing too much of these trends, because we're not getting enough pullbacks on the 4-hour charts. We are getting them, but I don't like taking 70 extensions. 75, 80 is where I'm interested. 80 is where I'm all over it. Yeah. And look at how many times we've had an 80 on this. I've just been missing all these opportunities. 75, if I'd have been using that as a trigger on the RSI, would have got me into another 3 positions that I would have made very, very nice profit out of. In fact, I'd already been in that one probably, because I would have got into it here. That just accumulated before it dropped. So it doesn't matter which of those you took, they're the same thing. So if you look at it, really, there was one opportunity there I've missed because I didn't take it, and one there. So I'm looking basically for ways to get in on the hourly, because we're not getting the extensions on this. I'm not changing my RSI down to a 7. The only place to go from here really is a 7, and that's way too aggressive. Way too aggressive. I'm just going to get far too many false signals on it. So I can't look at changing the 14. That works nicely when it works. So so the hourly, I've switched it. I am still looking at it from an analysis point of view on the 21, but I've done an analysis between the 21 and the 14 to see what the best settings are on these fast trending pairs, Aussie New Zealand 125 weekly range, that's coming down still. Again, so I'll be getting into a second position on that shortly. No, I won't. Not quite yet. It needs to come down a bit further. So what I've come up with, and it's not much different to the set file that's already published for the EA. The one that I've got published for the EA is the trend, the mean reversion trend one, which I'm not sure I've got on this. But it's very similar. So the set file I'm using, and I'll post this in the Telegram group, is this one here with 72 trend, H1, RSI 7030, half ADR. No, it's not, sorry. Scrap that. That was the one I was testing. This is the one I'm using. It's 72 trend, H1, RSI 14, lot multiplier, right? Which is very similar to the trend set file, which I haven't got here. It's this one, GUM15 trend pullback. That's the set file that's published on the blog post about the EA. Yeah, so it's not that one. It's similar to that one. So it's this set file here. And basically, with trend RSI extended, obviously you just need to make sure you set the magic numbers correctly. But what it's doing is it's getting in with 0.25% risk on half an ADR. So exactly the same. Yeah, we're using half an ADR as our stop loss. We've got 0.25% risk on that initial position. Yeah, that initial stop loss is obviously taken away because it's position trading. The filters are higher time frame RSI on the 1 hour 14 is 75.25. 70.30. The difference here, and the reason I'm using 75.25, is if you get to 70.30, quite often what I found in visual backtesting was you get to that 70 line, yeah, and it kind of just does that and pulls back. And it does that a few times. But what happens to price is price pushes and accumulates. And then it pushes and accumulates. Yeah. So what happens is you get into squeezes faster using the 70. If it hits the 75, let's say we've got 75 and 80. If it hits the 75, the vast majority of the time it hits the 80 because it's a fast, extended, stretched move. So this gives you false signals more than the 25-80. So it doesn't matter which of those you use, really. I found most of the time, if you're hitting the 75 extension, you're hitting the 80. So I've just gone for the 75 because sometimes you hit the 75 and it comes back down very nicely. So we're using the 75.25 on the 14 RSI on the hourly. Higher time frame, I've chosen the 72. So it's a toss-up between using the 24 or the 72 as a filter. The vast majority of these trend pullbacks, as you can see, pull back into the 24 nicely. And this is the same on a lot. But if I use this one, I miss all these trades. So I'd much rather use this. You know, this is what I designate as we are in a big downtrend. This is a nice pullback into it. So I found when I was looking at the hourly chart, this is the 4 hour, obviously, I know, but there's not a lot of difference. If you get extended above the 75.80 on the RSI on the hourly, and you're close to the 24, most of the time it will tap above it anyway. So you might as well use this one because you're going to get into the trade anyway. It's just that you would miss all of these beauties here. Yeah, you would have missed that. Let's mark that spot. So somewhere around there, if we look at that on the hourly. Yeah. So Is that the 14? No, it's a 21. Let's just move that down to a 14. So looking at this one, yeah, that was that extension. You got triggered on it here. The short, you got triggered on it there. Yeah. The 24 is coming down on top. So if you're using the 24, you're in it here. If you're using the 72, and this had not have hit, but it had have hit here, you'd have missed all of that. So there's no point in, I don't think, in using the 24 as a filter on the 4 hour, or on the daily rather. I think it's much easier and better just to rely on the 72, because, you know, this is the trend, isn't it? This is also the trend, but this is the pullback into the trend, 24. That's what we use. So 72, to cut a long story short, is the filter. On the daily moving average, EMA, same as usual. Settings I'm using for it, I'm using a lot multiplier. With my hourly H1M5s, the trades, you want to be faster. You want to be in and out faster. It's a choppier time frame. You don't want to be stuck. The danger of H1 M5 is you can get stuck in a real bad squeeze on the way to getting an H4 extension. I want to be in and out faster. So using a lot multiplier of 1.3, which means obviously if I get in with a 0.02, the next position will be a 0.03, and the next position will be a 0.04. So it's not martingale before anybody that's not watched me before. Martingale would be a 2, a 4, an 8, a 16, a bust. Yeah, this is very small increments. So all we're doing is we are dragging our moving average, our break-even line up. Instead of doing our break-even line there, our break-even line between these two positions would be somewhere like there. So all we're doing is we're keeping it within that ADR. Yeah, a little bit faster. So the moving average being within the ADR, which is always our goal, isn't it? Is to keep the moving average within, keep our break even within an average daily range, because we know price moves an average daily range. When it's having a big, strong move, it will do an ADR. So as long as we're keeping this break even somewhere within that ADR, all we need is one day in our direction and we're done. We're out. We're happy. So all that 1.3 does is it keeps this a little bit closer. It gets you into a little bit more drawdown, but not substantially. If you're getting into a squeeze and we're suddenly up in 6 positions in the wrong direction, you're going to be doing aggressive drawdown control anyway. So it doesn't matter if you've had a lot multiplier, does it? Because you're suddenly getting aggressive and you're going in with 50% of the size anyway. So that's what I've always used, and that's what I've used as testing in the H1M5 set file anyway. So distance between trades is half an ADR. I've put a profit target of 1 ADR. That isn't really something I don't think will get hit. It's there as if I'm asleep in Asia and we get a massive drop during the Asian session and I'm not available to take a profit, get me out if we've done an ADR. That's all that's there for. It's not a target. I will be getting out manually of these trades depending on how they're going and what I think is going on, obviously, as I always do. The EA is there to get me in and out of positions, get me into positions rather, to scale me in so I don't have to do that manually. I'm making decisions on whether I take them off. But 1 ADR is easy to hit. So if we move an ADR in the direction, that's why I'm out. And that's it, really. So obviously all the other settings are the same as normal. The ignore settings and everything is as standard. So that's the set file I'm using. I put it on the DAX this morning. Obviously I'm in a buy at the moment, but I've told it to go short. No, I haven't. I've told it to trade in line with the moving average. So I haven't got the moving average on there. But obviously, as we know, DAX is a short. So Forex trader, yeah, I've had the 4 hour set up all week with trend filter and it hasn't gotten there all week. So Lordy was just thinking about switching to H1. Yeah. Yeah. So you won't. And this is the problem with trends. It's not normally the problem with trends. The problem with trends at this particular moment in these particular market conditions, which is why, I keep saying it over and over again, and I'll say it again, EAs are never, ever going to work long term. No EA is ever going to work long term because market conditions change. We had COVID. We had an invasion of Ukraine, this sort of stuff changes market conditions. We're going into a recession. Yeah, normal S&P market conditions. That's normal market conditions. This is abnormal. Yeah, no EA, mine included. My EA, it more than doubled my my pension fund account in that period. If I'd have left the EA running, I wouldn't have one anymore. Yeah, I took it off because market conditions change. Human beings can recognize market conditions. EA is very, very, very difficult. You can put volatility filters and all sorts of stuff in ADR filters and ATR filters as much as you want, but it doesn't know when Russia's invading Ukraine. Yeah, so market conditions change. The problem we have with market conditions at the moment is these trends are so strong, you are not getting any pullbacks of any strength. The US is so much stronger than the pound, you can't get the pullbacks. But you will find you'll have temporary profit take moves. Not so much like this. This is a really bad time to look at it, isn't it? Because of what's happened with the pound. But you'll get profit take moves, yeah, which will give you an opportunity on the hourly charts. Yeah. Yeah, and this is a trade here. I mean, look at this one here. You'd have been in. This is the hourly chart. So somewhere in here, you'd have had a 5-minute reversal. You'd have been out there. And if you weren't out there, you'd have been in on a second one, and you'd have been out there. Yeah. 1, 2, 3 days, in and out. Dusted. I'm not holding it. I'm not looking to get into these trends. Yeah. And this is the other thing that's important to understand with the setup. I'm not looking to capture this. Yeah. I'm looking to capture trades in this direction. In and out, in and out, in and out. That's what I'm doing. I'm constantly getting in and out, and I'm making this green. I'm not looking for home runs. Home runs are for the glory seekers, the guys that want to go, hey, look, I shorted here with 65 positions. I got out down here and I quadrupled my account. Good one. Do that for a year and let's talk again. That's not what you're after. You're not after the home runs. If you want to keep a runner on, no problem. Yeah. Get in with the EA into 3 positions. Yeah. And then close out 2 of the positions, stick a break even stop and pray they don't come and take it before it drops. Fine, do it. Hold it as long as you can. There's nothing wrong with that. But my goal always is in and out. My job is to make this pay the mortgage. I have to be paid. Yeah. Think of it as you're working on a weekly wage. Every week you get a paycheck. Yeah. If you don't take your paycheck, you can't pay your mortgage. I don't want to be the trader that goes, I made a fortune. I want to be the trader that pays his mortgage by not having to go to work. Well, I do go to work, obviously, but I don't want to go to work for anyone else because I don't want to do that. So pairs, that's the setup. I'll post the set file. I'll get that put in the Telegram group for anybody that's interested in it. Pairs, I'm undecided. Again, I'm going to think on this. The obvious ones are the trenders. So what I'm not going to do, obviously, is overexpose myself. So pound US is obviously going to be on the list because it's a beautiful trender. So flicking through the pairs, Aussie CAD. Yeah, we want to look long term. It's a pretty decent trend. Anything that, if you just look at your chart, scale out. If you look at the last kind of year and a half, is that April 22? That's the last 6 months or so. Let's go to the daily. So I'm thinking since COVID and definitely since Ukraine. Yeah. So this is obviously Ukraine, which was March time. And since obviously we kind of got on top of COVID, if you like. So anything in this period that has been doing something, nothing has changed from an economic stance apart from things getting worse. So that should continue for the foreseeable. And I reckon somewhere in the region of 6 to 18 months, depending on obviously what happens. We've got no idea what's around the corner. But that's what I'm looking at. So looking at the daily chart, if you're going back sort of a year to 18 months, anything that's trending nicely is a good target for us, isn't it? So Aussie CAD would be a good one. Aussie Swiss is a little bit more volatile. Aussie Yen, I'm not putting any yens on at all. Aussie New Zealand, yes, longs. Yeah. So again, Aussie CAD short, Aussie New Zealand long. There's no problem having a hedge, I don't think, at the moment, because this is a trend-based strategy. It's going to have a low strike rate. 40% of the time, 30% of the time, it's going to be right on its first entry. Most of the time, it's going to be wrong. Trend strategies have a very low strike rate. So it doesn't matter hedging, because we're going to get something like that before it goes. So I might make money on one of these, and then I'll deal with the other one, or the EA will deal with the other one. Yeah. So that's a lovely trender. Aussie US is a lovely one, but again, that's all I can do. 2 US pairs. So I've got to pick the best ones. So pound US for me at the moment is a brilliant one. Pound is a short. US is a long. Definitely want to be on that one. So I've got to pick one more. Euro US. But it looks very similar, doesn't it, to the pound US? So you could pick both of those if you like. But what you might find is that these both move at the same time. I think personally now, though, the pound and the euro are way more out of sync than they used to be. So I don't think necessarily is a problem having both of those on. But personally, I would rather have one European with a US and one Asian with a US, because you've got that that difference in session. You've got the Asian session where they'll move the Aussie, and then you've got the European and US session where they'll move the US dollar. So you tend to get a little bit more push and pull. And what do we need? Push and pull to get in and get out of our positions. So again, I'll be looking at things like ADR. Again, at the moment, it's a bit out of kilter, but you got 115 there. Euro US, you got 136. Pound US, we got 242. New Zealand US, we got 123. US Swiss 129. So there's not a lot of difference in them, really. Just doing the analysis live with you here, but Aussie US is probably a good second choice. CAD Swiss, is that trending? No, not interested. Not trender. CAD Yen, it is, but it's a yen pair. Swiss yen's a yen pair. Euro odd, not really at the minute. Euro CAD, yeah. So that's a fairly decent one. At the moment, obviously, the euro's having a bit of a rally. But, you know, looking at the 200, that's where we are at the minute. If the US continues to be strong, the CAD will continue to be strong. If oil continues to go up, the CAD will continue to go up. Is there anything changed in the Eurozone that means it's not collapsing? No. It's having a little push because they put the interest rates up for the first time in 9 million years. Of course, it's going to have a little rally, but it doesn't mean the Eurozone is strong. It's on the verge of World War III. Yeah, not really interested in longing it. Now, the trouble with this one is your EA will be taking longs now. Yeah, because we've said we want you to trade in line with the trend, with the 72. It's above the 72, so it'll be looking to take longs. So in that particular instance, what you need to be doing is coming in and going, only take shorts. Yeah. And that's what I want to do with the DAX, actually. I'm going to do that. So only take shorts. So just be aware of that. Obviously, what we don't want is, you really need to set that as a rule. What we don't want is it to suddenly start going long up here. Yeah, we don't want to go long there. We're in a downtrend. So you want to make sure you set it up for the right direction as well. Euro Swiss, that's a lovely short. I'll definitely be using Euro Swiss as one of mine. Euro Pound is a mess. Euro Yen is a yen. Euro New Zealand is a mess. Euro US is lovely. Pound odd. Up until the intervention, it was starting to look pretty good after Ukraine, but not the best in the world. You know, look at it. If you've got the two pair rule for exposure, yeah, you've got to pick 2 pound pairs. to trade. Yeah, look at them. The way to do this is to look at them and go, pound odd, does it look good? Not very trendy. Pound CAD, more trendy. Pound Swiss, much more trendy. Pound yen, mess. Pound New Zealand, mess. Pound US, super trendy. So if you've got to pick 2 pairs to trade, those 2, isn't it? It's not hard. That's all I'm doing. Is it trending? Yeah. Then I'm putting an EA trend strategy on. I want to find trenders. Yeah. So that's all I'm doing. So I'm going to finalize my list today, making sure that I don't overexpose myself too much. I'll probably end up putting it only on 6 or 8 pairs, I think. And the DAX. I'm on the DAX. I was going to pick one of the US indices. The problem with those, and the fact that I'm on Robo Forex as a broker, is that Robo Forex gaps with these. With the US indices, you don't tend to gap because of the Globex session that is run on the Chicago Mercantile Exchange. The data, stops at 11 and starts again at 3. You get a lot less gapping on it, which means that I'm going to get a lot more orders triggered during accumulation periods, which I don't want. So that's the only reason I've chosen the DAX as an index. I was thinking about oil. Gold I don't touch with a barge pole, as you know. Although saying that, yeah, thinking about what I just said, when you're looking at US pairs, you've got to pick some US pairs. All right? What's that? Just the US pair, isn't it? It's gold paired with the US. So if you look through all your US pairs and you go, actually, I don't. I like the Aussie US. I like the pound US. I like gold US. Maybe it's a contender. But if you're going to trade this, I would probably reduce my risk on it slightly, because I think you're going to get into a few more squeezes. But it's trending, isn't it? It's trending. So if you want to get in on this on the hourly, you've had an opportunity there, not quite there, not quite there, not quite there. See, this is the difference between the 70, right? This is a really good explanation of what I just said about the difference between the 70 and the 75. When we hit the 75, we've had to put in a big move to get there. And we'll quite often hit the 80, 75, 80. Yeah. When we hit the 70, a lot of the time what happens is we accumulate there. So we got a 70 hit there. What happened afterwards? Bang. Yeah, we got a 70 hit there. That one dropped. We got a 70 hit there. We got a 70 hit there. It did come down on that one. That one we got a 75 hit. Yeah. So you see the 70s. This is exactly what I came to the conclusion of with all the. I spent about 4-5 hours yesterday doing visual back testing like this, which is for me the best way to do it, because I'm only looking at recent times. I'm interested in a trend-based strategy now based on Ukraine and recession. That's this strategy. I found visually a lot more accumulations off of the 70 than the 75. The 75, if it was going to squeeze, it still squeezed. Yeah, if you get in on the 75 here, you still got squeezed. So what I found was the 75 filtered out a lot of accumulations, and accumulations come before potential continuations like that. Yeah, there's a 70 continuation. I was already in on the 75 anyway. You can't stop that. Some of them you're going to get squeezed on. That's just a fact of trading. You get in position trading, you're going to get squeezed. Just the way it works. But the filtering on the 70 just gave me those fewer squeezes. And the difference between a 70 and an 80, as you can see here, the only 80 entry you had was that one, which was lovely. Yeah, but that was also a 4-hour extension. So it defeats the object of using the hourly, because you're going to get extended on the 4-hourly anyway. Yeah. So what we're looking for is we're looking for ways to get in more often, aren't we? And the 75, when you hit it, if you're going to hit the 75, a lot of the time you'll hit the 80, or the 75 will just work. That was a beauty. That was an in and out. You'd have been in and out on that. And if you weren't, unfortunately, you were squeezed. But this is the whole in and out. You got to get in and out as quick as you can with these things. So you'd have got in there, you'd have taken 174 out of it, which is roughly half an ADR, and that's always my target. I'm always banking half ADRs, aren't I? So that's it. So that's a really good example of the theory, of the back testing that I did. So yeah, there's gold, obviously, is another opportunity. Oil, I was very, very tempted to stick it on and long oil, but I'm not going to. I haven't got enough experience with oil to know for sure what is going to happen with this. So I think it's a long, but and there's a lovely bounce. It's not that lovely, actually. Support resistance is pretty tricky on this. It's just bounced off of that low before the pump. So that could be it. This is where I would be interested. I am still interested in longing it. Hoping that we'll be a bit down here. But the idea is here, I'm looking for a cross on the 24.72 moving forward. So this is a 24 bounce I'm taking. Yeah. So this is the first. For any of you Steve Mauro fans out there, you remember the 2050 cross? Was it the 2050 cross? Can't remember it. Didn't it have a name? Don't know. But the first time the 20 crosses the 50, yeah, you take the first 50 bounce. Yeah, pretty similar stuff with me, 24.72, except this is on the daily, obviously. These are the daily MAs on the 4 hour, obviously. First time we cross above the 24 shows signs of strength. If this is going to be a trend reversal, you're going to get that initial bounce as this strength is confirmed to continue, which is a low, high, higher low, higher high, market structure reversal, which is a bigger version of the reversal retest. All the same stuff, isn't it? Markets, doesn't matter how you, whether you use a market reversal alert indicator, whether you use moving averages, whether you just use blank charts and just see market structure, it's the same stuff, just happening in different speeds on different time frames. That's all it is. That's all trading is. Guys buying stuff, guys selling stuff. Guys buying stuff, guys selling stuff. Every time they buy too much of it, they got to sell a load more of it. Every time they sell it too much, they have to buy it fast. In the market short, out the market long. In the market short, out the market long. In the market long, out the market short. Market structure. Very simple, isn't it? Why aren't we all millionaires? Right. So I'll make a decision on the pairs today. That's my job this morning, stroke afternoon, is to decide on my final pairs, and then I will get the EA set up properly. Pound US dollar I've already got on, so I will probably keep pound US dollar on. And obviously Aussie CAD and Aussie New Zealand I'm currently in positions. So and obviously DAX I've set up live. So I will have a think about those and get that set up today, really. So let's look at the DAX, 0.2% up on the DAX. I'm just going to take 0.5% on this. There. It's a bit too close to move to break even at the minute. I'm just going to move the stop up on it just below break even. So there's be a tiny little loss. If this is going to work, it's going to likely come up to one of these highs, probably into that propulsion gap or that one. That's not really a propulsion gap though. Let's say that one. I'll just take 0.5% on it. That's all I'm interested in this morning, because I think we're just going to range. We've got way too much news today for the market to make any decisions about direction at the minute. It needs to know what's coming with the PPI figures, and it needs to know what FOMCs can talk about. So I think we'll be pretty rangy. Anybody got anything else they want to look at or cover, or any questions about anything? Let me know. And I'll post the set file in the group if anybody wants to look at it. but it is pretty much the one that is on the blog post anyway. It's the H1M, it's the GU15 trend file. It's just been adjusted basically. So it's this one, which is already available, the GU15 trend pullback. It's just that with a tweak on the RSI, literally. That switched to 1, placing obviously on the M5, and obviously 75-25 instead of a 60-40. So I'm looking for bigger swings on a lower time frame using the same RSI. That's literally all the differences on it, 1.3. And I've disabled that because this was set up for a 5K account. So that was taking basically a 0.5% profit. So I've taken the monetary profit target off and I've just left it with an ADR because I'm going to manually manage it. Apart from that, pretty much that set file. So, but I would use this filter just to make sure you're not accidentally getting into longs on the euro, for example. Yeah. I don't want to long the euro. I'm fundamentally short on it, but the EA doesn't know I'm fundamentally short on it. That's what that setting's for. Yeah, all these settings in here, it's all. I know there's a lot of it, but there's a reason for it all. This is my "don't be an idiot." The euro's a short button. I've got to teach the EA and tell the EA what the fundamental situation is on the euro, or the pound. Or at the moment, the Aussie. Yeah, I've got to tell it this, and that's the only way you can tell it. Don't be an idiot. If you get a long signal, don't take it. That's your idiot filter. But again, this is only as good as the person programming it. Garbage in, garbage out. If you set this up to trade like an idiot, it will trade like an idiot, like anything. This is why I don't like all these EAs where you've only got 4 settings in them. There's one that came up in an advert actually on YouTube when we were going live today. And I went and had a look at it. Galileo FX, I think it's called. There's no settings in it apart from risk. And he showed me a back test over 1 year on an hourly chart. It's like, all right, okay, what happened the other 15 years? Yeah, don't show me a back test result over a year. That means absolutely nothing. What year was that? Was it COVID year? Was it the Ukraine invasion year? Was it the year in 2008 we had a financial crash? Yeah, it's a load of rubbish. Yeah, I have no idea what that EA is doing, that bloke showed me. So unless you can break down the mathematics and the logic behind everything that thing does, I ain't sticking that on a live account. Which is why this does all this. Every single one of these is explained in detail, isn't it? You know exactly what it does and why it does it, more importantly. It's not the what, it's the why. Why take a long? Because I've got a bias, long. Yeah. All these settings have got a reason. Why have an RSI filter? Because I want to get into mean reversion trades at extended conditions. Yeah. Why use a moving average? Because I'd like to be in line with the current trend for the last 24 days. They've all got reasons, but you can't just set it up and pick them at random. You have to have logic behind all these, which is why you can set up a load of ADR filter. Is set to true on that? No, it's not. Sorry, that was just set up as default then. But yeah, ADR filter, why? The why behind ADR is the logic of extreme pushes requiring profit take moves. People go, I'm going to trade ADR. Why? Why are you trading? You need to know why. Any EA you look at, any EA you buy, any strategy you look at, unless they can tell you the why behind the do, you can't trade it. You've got to have faith in it so that you can backtest it. I'm just going to break even on this. Might as well now. We've just got the reverse alert on the DAX. We're not far away from 0.5%. It's the only thing I'm going to bank today, I think. Pound is pushed back. So it doesn't look like we're getting that collapse on the pound today. Right, Bank of England just announced the bond buying scheme is still to end on Friday. I won't speak about monetary policy today. Okay. There's something afoot here. Something's going on. I've got a feeling this is what slightly worries me about this pound trade. This is the only thing that worries me about the pound at the minute. The Bank of England have just announced all of this. I've got the feeling the government are going to U-turn this entire mini budget. And the reason I think is purely based on the fact that our Quasi, who came up with our little mini budget, couldn't give us any indication as to how he was going to pay for this until the end of November, which means to me that there was no plan in place. That was let's do this now because we're a new government. We need to prove something. We need to prove a commitment to everybody. And we'll worry about how we're going to do it later. But right now we need to put our foot down and go, we are different. The market was not impressed with that, obviously, because as far as they're concerned, and again, this is the why, you're doing something, but why are you doing it and how are you going to do it? They couldn't say it. Then he brought it forward to October. And I don't think they've got a fiscal policy in place that the maths actually works on. And don't forget, they've got to get past regulatory bodies to put all this in place as well. I think the Bank of England's had a meeting with them and they've gone, right, we're going to stop all of this stuff. Yeah. I suggest you stop all of that stuff. And the fact that the Bank of England has moved first, I think we've probably got something coming from the government, which is going to U-turn this. If that happens, that could potentially be bullish pound. And that's the only thing that's worrying me about this at the minute. That doesn't mean anything. That's just a confirmation of what happened yesterday. Yeah. But that's the fly in the ointment on it. So we got to be a little bit careful on it. I don't think this reaction that we're seeing at the moment, remember I said this morning, there is a good probability we're going to come up and undo this. Just come up, get back in. But that's the only thing that worries me. And obviously the Fed this evening dumping the US dollar. Wasn't the overall trend before the government announced also about? Yeah, exactly. And that's what I mean. It's, this. But this is the difference. Yeah, this is what the situation was when they announced it, right? Which made it worse. We got bailed out, and now Bailey said we're going to get rid of your bailout. So in theory, that's what will happen. But that's what's happening at the moment. That is what was happening before they announced their catastrophic thing. If they undo the catastrophic thing, it doesn't make it better. It means that we just continue as we were. However, they now know what the market doesn't want. So they can now, in theory, put into place something that the market will be happy about if they reverse. So the two things that have got to happen is they've got to reverse the decision. The mini budget, they've got to go, that was a cock up. We'll scrap that. Start again. Just let's all think, the last 3 weeks didn't happen. Back to square one. Back to square one is bearish pound US. Assuming FOMC doesn't go bearish US, which will help this push up. But so yeah, I think that's the case. But the government is in a position right now to make the Bank of England have basically given the government a get out of jail free card. If you want to make a U-turn, now's the time to do it because we are making a U-turn. Yeah. And don't forget, we've got the government pulling one way and the bank pulling the other for the first time in history when we've been in a financial crisis. Yeah. So this could well be the Bank of England, or rather it would be the other way around, the Bank of England giving the government a chance to fall in line with them, because these are the guys that make fiscal policy really happen. The Bank of England is all down to interest rates covering inflation. These guys can only do what these guys will allow them to do, because these guys, the government, have got two choices: borrow or tax. That's how we get money. That at the moment is controlled by the Bank of England interest rate. So that's hard for them to do because the Bank of England have said, we've got no choice. Sorry, these are things, this is going to happen for 6 to 12, 18 months. So if you want to borrow, it's going to cost you. What they did was they scrapped the tax, which meant the only option was borrowing, which is why obviously the pound collapsed. So the government have got an opportunity now to go, actually, we're going to reduce our borrowing. And instead of scrapping the 45p tax rate, we're going to move that tax rate down to 35p. So everybody will get taxed more that earns more money, putting much more money in the coffers, meaning that the interest rates will have less impact and the pound will rise. That's what Richie Sunak was going to do. In a nutshell. He's the guy that didn't get in. He's the guy that was running the money for the government. Yeah, the guy that was the best placed, in my opinion, to take over running the country was the guy that knew how to get out of a financial issue, because that's what he's done all his life. But no, let's put the woman in charge that has no experience with that sort of thing and see what happens. This is why we need to be aware of fundamentals, obviously. So yeah, just be, that's the only fly in the ointment I can see at the moment. And I've got no control over that, obviously. This is why I keep my eye peeled on here. Ukraine's Russian side does not allow convoy with diesel fuel to access Zaporizhzhia nuclear power plant after a power cut. Bank of England will never say never on intervention. Well, that's just the bank talking, so ignore that. Okay, that was quite a long session this morning. So let's hit target on the DAX. Anybody that was on that? That was a nice little trade, wasn't it? The only one today. Bottom bounce. Inventory retracement bar. Entry. Target. Might it not just undo the move? It started in normal. Oh yes, yeah. Sorry, I've just. So I'm reading comments after you. You're obviously a mind reader, ladder, because you're asking the questions that are being answered before I'm actually getting to them. So on top of the game, I like it. Right, so that's it for today. I'm not going to trade today. I'm going to watch it. The only trade I will consider today will be a double top bounce. And that has to happen with plenty of time so that I can get out of it by 1:30. Because obviously 1:30 is our first news event, which is going to upset the markets. So, well, not upset them, just move them. So be aware, 1:30 today, that's your first news. Here's our dating site. Always comes in at the end. It must know when I'm about to finish. Doesn't matter. I don't know why I bother reporting this, because it doesn't do anything. They don't stop it, do they? They're here every day. So reporting obviously doesn't have any impact. It just stops it spamming the chat. So yeah, that's all I'm interested in today with the DAX. It's a bit whippy, so you need to get in with a decent stop, and you play the long trades really, which is lovely if you can get them. But we are now 9:30. We're up here by 10:30. That gives us enough time to get back down to mid-range by the news announcement. So that's really all I'd be taking. If we come down and double bottom, I'd be less inclined to take that, because that would indicate this is a lower high, and potentially you're going to get that. So either short it now and go for the lows, or wait for it to get to the highs. I would. Apart from that, I don't think you get much out of it today. Got to wait for the news. Right. So I will post in the Telegram group that set file. I'll let you know what pairs I'm loading up. Yeah, and then off trading as usual. But I will still obviously be doing analysis every day, paying attention to everything. But I can't really find any other ways to get in on H4 at the moment. It's very tricky. It's having very, last few weeks, it's all coming out of scalping at the minute, because I can't get any positions on, because it's just not conducive at the moment. Everything's collapsing. Right, I'll be back tomorrow morning, 7:50, a little bit late sometimes on Thursdays, as you know. And obviously, I'm not here for FOMC this evening. I've got a spin class, so I'm never around for FOMC. I have a 6:30 class on a Wednesday. So I get out of that at 7:15. Normally we have a press conference at 7:30, so I'm normally around for this press conference, but there isn't one today. So I won't be trading it. I don't use Trade FOMC. It's too dangerous. I have done, but it's risky. So so be aware of that this evening, and then we'll have a look at the fallout of that tomorrow morning and see and get ready for CPI and retail. All right, so have a good one. Anything you need, let me know. I'll be in the Telegram group as usual, and if I get into anything, obviously I'll let you know as well if I get out of anything. Other than that, I'll be back tomorrow morning. Have a good one.